My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? Here's this week's Mortgage Report. Bonds rallied last week at the expense of the stock market. The Dow was down mostly due to new trade war concerns with China. China has announced an additional 106 items they will now impose tariffs on. Things like soybeans, cars, and planes. President Trump has begun pushing for an additional $100 billion in tariffs against China in retaliation for China announcing it will place a $50 billion tariff against the USA. You can see where this is headed. Look, tariffs have been around for a long time. The first tax on imports was back in 1789. Many of you have your opinions on whether this is a good thing, and I know President Trump wants to help our steel workers. But from a mortgage report standpoint that I bring to you every week, I'm just going to look at it from a bond perspective because that impacts mortgage rates and, well, that's why you're here. It's good for the overall economy to have both imports and exports rise. Our president is very concerned about the imbalance in trade over the last 4 months. Imports have risen in the neighborhood of about 12 billion, but exports have only increased 4 billion. The markets may fear that this growing imbalance will feed President Trump's concerns and validate what he feels is a reason to enter into a trade war. Right now, about 25% of our GDP is trade, exports. If we get into a trade war, other countries may decide not to buy our stuff. And the stuff that we buy, imports, those prices will go up. And that's inflationary. The bond market does not like inflation because inflation is the arch enemy of bonds. Higher inflation erodes the return you get on a bond. You get a fixed return, a fixed dollar amount. So if inflation starts to move higher, your buying power gets reduced. So as inflation rises, the way to counterbalance that is to raise rates. So my 2 cents, long term, I don't believe bonds or mortgage rates win with a trade war. So how does the market look right now? Mortgage bonds ended last week, Friday, up 13 basis points, which is a lot less than you would expect with stocks down so sharply. With the Dow down almost 600 points, bonds typically would be in a rally mode. This speaks to some underlying weakness right now in the bond market. We did end the day just above the 50-day moving average, which is a good sign. We need a strong opening on Monday for this to truly be bullish for bond prices. So bottom line, I'm starting off this week in a carefully floating position. So what does that mean? Well, if I have clients that are closing in the next 15 to 30 days, I would recommend to float their interest rate versus locking in to see if rates will come down just a bit or if the price they must pay to get that rate decreases. Look, I've been a mortgage advisor for over 20 years and been very blessed to have provided financing to over 25,000 families. I watch the markets to make sure I can get you the right home loan at the right price. I'd love to help you with your home financing options. Give me a call. With Bob Mortgage, your dream loan is already within your reach.